So first of all, I hope you can help me bid welcome to 3 first-time TechBBQ attendees. You will get to meet them a little more as we get started, but just high level, Merete from the European Investment Fund, Kasim from Novo Holdings, and Peter from Pension Denmark. And this session is all about European innovation. How do we utilize kind of the current state of nations to ensure that we further develop our competitiveness, but also that we potentially get to grow some of our own tech unicorns and tech giants in this. So a little background from my side before we jump into the panel discussion. I would want to claim that Europe is actually quite brilliant at innovating. What we are less brilliant at is in scaling. So we've seen multiple fantastic innovations and companies started in Europe that ends up scaling in the US or somewhere else. A really good example, especially with Google standing just behind us, is DeepMind. DeepMind founded out of the Oxford University, an English startup that today became one of the poster childs of the AI revolution. When they needed capital and compute in 2014, they could simply not find it in Europe. The investment size was 600 million pounds or dollars, and they couldn't find it. So they ended up being sold to Google and is now basically an American company. And I think you could say the same for cloud computing. Despite initiatives like Gaia X and others, Europe is still a consumer of Google, AWS, Microsoft, my own former employer, and other technologies. We haven't really built our own hyperscalers. And I think the pattern is quite consistent. We have world-class science, we have world-class talent, we have some really great startup hubs around Europe, but when it comes to the capital needed for scaling, we seem to fail. Just a few numbers before we jump into it. I think the contrast is quite significant. In US, venture investments average around 1% of GDP. That's 3 times as much as in Europe. An American scale-up usually raises twice as much capital by their 10th year as a European scale-up. And maybe interesting for the discussion today, especially with Peter on the stage, is that the American pension funds allocate around 11% of their total capital to venture and private equity investments. In Europe and in Denmark, that's a fraction of their investments. So while we might not be able to mirror the American venture market, what can we do by being more creative, by working together in a new way, in order to actually be able to raise the plus $100 million tickets for European startups? And with that, Peter, let me start with you. You recently stepped in and made your first quantum investments, which is quite unusual territory for a Danish pension fund. So what gave you the confidence to do so, and how did it become part of your investment strategy in a traditional pension fund, if I may?
Yeah, so thank you, Nana. And it was part of a broader new strategy we adopted for Pension Denmark. And on the investment side, a part of that was to set aside 1 billion kroner and set up a framework for direct venture investments. And that was due to the same analysis as you just outlined, that it's curious to see that we have so much structural capital in Europe, but we don't invest it in venture at all. If you look at the numbers, you mentioned PE and VC numbers. If you look at only venture capital, it's 0.02% of the pension fund capital that is invested in European venture. And for us, we have venture investments, but that was almost exclusively through funds in North America. So we wanted to dip our toes in investing in venture directly in Denmark and Europe, and we wanted to do it in tech industries where there is a promising potential for particularly Denmark. And we found that quantum computing is one such opportunity.
Thank you for venturing into this. Just one comment before I continue. There's a Slido QR code up there. So if you have any questions, please do post them to Slido, and I'll try to incorporate them in our discussion instead of waiting to the end. Kasim, Novo Holdings as an investor has really shown that a bit more patient capital, but also specific life science expertise can really grow some global giants. Like Peter, you've also started investing in quantum and more kind of in the tech area. How do you see the sector? Do you value that it's ready for investment, both for traditional investors, or is it more long-term investors like yourself? Or is it still too early?
No, first of all, it's a pleasure to be here, and thank you for inviting me on the panel. Our ultimate focus and purpose as Novo Holdings is to generate attractive long-term returns for the foundation to be able to do the phenomenal and great work that it does. So we're very much of a financial animal and investing primarily in life sciences. We are probably the world's second largest biotech venture investor. We deployed about $750 million last year, so a really significant effort, and it's a direct effort, so it's not through managers and private equity. But, and I think this is what's really important, and I think Nana partly addresses your question, we are a responsible investor. We feel that we have a responsibility to the country that we reside in. We have a responsibility to all the countries and to the communities that we work in. And therefore, we will also invest for impact where we are sacrificing perhaps short and medium-term returns. By the way, maybe even sacrificing long-term returns, but you get those benefits in other ways. You get it in terms of building an ecosystem around you, around your enterprise. And that's really what we've done in many instances. We've stepped in with impact funds where we felt that scientific research was badly needed and wasn't being provided by the pharma companies. So antimicrobial resistance, bacteria that are resistant to medication is a big issue. We're one of the world's largest investor. And in terms of quantum, we found it very difficult to justify doing it, frankly, at this stage at market return rates, but we are doing it out of a responsibility towards Europe. And I think one of the most important things that we've achieved in Europe in the last year is really the wake-up call. And for all investors, whether it's the pension funds, whether it's us as a foundation, whether it's the EU itself, just waking up and realizing what it means and what it takes to become competitive in today's world. And the fact that we have woken up to that, I think, is a major step forward.
Very much agree. And now that we mentioned EU, Merete, you representing the European Investment Fund, it's often described as this catalytic investor in Europe. But we still see several European innovations leaving the continent and going elsewhere to scale and to get the needed funding, like the DeepMind example I mentioned, not being within EU, but still in Europe. What role do you see IEF playing to prevent the next generation of these innovations, including quantum, leaving Europe?
Thanks a lot, Nana, and I'm happy to be here to bring exactly the EU perspective, because we share very much your analysis also, that there is a lack of scale-up finance in Europe, and that's obviously one of the problems. That's why the companies, when they want to scale up and grow and become globally competitive, they will have to leave, in many cases, Europe to get that financing. And this, of course, we cannot have. We have to do something about that. So that's one of the obstacles. There's also a certain level of risk aversion among many investors here in Europe that we don't find in the same degree across the Atlantic. And of course, we also have regulatory obstacles, a more fragmented regulatory framework in the EU. So what we want to do something about in particular is to make sure that there is sufficient financing for both the early stages, because we should not forget that the ecosystems that Kasim was speaking of We need to have ecosystems, we need to have venture capital funds for all the different sizes of the companies, for the very early ones, for the ones that have found some commercialization of their products, but also for the big companies who need to have the very big tickets, the one that are above 100 million euros. So we have at the European Investment Bank Group level, because we are, EIF is a part of the European Investment Bank Group, we have set up what we call a Tech EU program, which is a program that is supposed to cover across all the different tech verticals, if you will, from security and defense, health tech, clean tech, biotech, AI, quantum, which was mentioned. And boost the financing, boost also the products that we have, make them more targeted to the specific needs of the founders of small startups and scale-ups in the tech area. And we have, until the end of 2027, we will dedicate 70 billion euros to that. 70.
That's a lot.
That's a lot, and with the leverage that we have, we always invest together with private investors, with other public investors. We think that this could mobilize some 250 billion of financing into tech. And a part of that is that Europe needs very large venture capital funds for the quantum, for the AI, to be able to provide these very big tickets. For the scaling up of these areas. So we've set up what we call a European Tech Champion Initiative, which is aiming to do exactly that, to support the funds, the very big venture capital funds in Europe that are able to provide such big tickets. We have already started it. We have the intention, together with our partners, which are 6 member states, and the EIB, which has also chipped in to this initiative that is managed by the European Investment Fund. We have so far invested into 11 mega funds, funds that are either over the 1 billion mark or just about to get there, and who we want to get over the 1 billion mark in order for us to have these European-grown mega funds. And we have supported a number of companies through these funds, including also some unicorns, companies like Bule, the AI language platform, Travel Perk from Spain, and a number of others. So we are very excited about this, and we want to launch now a second generation of the Tech Champions Initiative, which hopefully will bring in more of the member states. And also we are looking at getting in institutional investors like the pension funds, like foundations that these gentlemen are representing.
Thank you. And just incorporating one of your questions, Peter, returning to you, what do you think it would take for Danish and European pension funds to lean more in and to actually be able to do not just kind of limited investments in these tech scale-ups, but some of the larger tickets? Is it a regulatory constraint, or to the questions from the audience, or is it more of a mindset challenge we have in Europe when it comes to risk tolerance and risk aversion?
So there's a lot of factors, and both of these are part of the problem. Starting with fragmented capital markets in Europe, that's a major problem. And also you don't have the same tradition of building venture funds that would be very useful for pension funds to invest through, to have diversification. And also you see that the savings are very fragmented in Europe. We don't have a developed pension system with large pension funds in most of the EU countries. One thoughtful observation from Draghi in his report was that if you look at the pension fund capital in Europe, 62% of that is from 3 small countries, Sweden, Denmark, and the Netherlands. 62%, and this tells how how fragmented the savings are in the rest of Europe. And most of those savings are just not invested through institutions, and outcome is far too poor. We actually have more savings in Europe than in the US, but returns are less than half of what they get in the US. So that's a major problem. We need more institutional capital, and also looking at Europe's pension system, there's too much defined benefit schemes. That means that the institutions will be investing super defensively, super secure in bonds, and not risk-taking in capital markets, which on the long run gives a much better return.
Kasim, you also had a comment on this.
Yeah, I just wanted to make a comment, really picking up on what we heard from Peter and Merete. I just think we need to be careful by always blaming a lack of capital. So I think absolutely there is a lack of scaling capital in Europe. There is absolutely less risk appetite. There is a structural problem with the pension fund setup. And there's no question we need more money. On the other hand, I could also make an argument that the world is awash with cash. There is plenty of money in the US that's not just looking to invest in the US. There's plenty of money in other jurisdictions that's looking to be deployed. And frankly, one of the things they like about Europe is they find valuations here much more attractive. So why aren't they investing in Europe? They're not investing in Europe because the business plans don't look attractive. Why don't the business plans look as attractive? It's because the scaling is not the same. You scale in the US, 370 million population, one country, one language, one legal system, one exit market in terms of NASDAQ, etc. Europe, there's so much friction. So yes, we should talk about capital, but as importantly, Merete, is the word support that you said. We need to make sure that there is a structure in place, and I don't know where necessarily that sits, where we can support companies in saying, for the startup in France, here is how you most quickly and most efficiently launch and scale, not just in France, but in Germany, in Poland, in Italy. It's not going to be easy, but I think unless we crack that nut, we're not going to be in an optimal place to get our hands on the capital we want.
So making the dream about a single market a reality. Merete, any comments? I know you cannot represent the full commission, but at least you're the closest we have.
Well, I would say I fully agree with you that in order to be able to match what can be offered in the US market, we need to look also at European level solutions. So we need to have cross-border funds that can easily support a scale-up company in France as in Poland or elsewhere. And that's why we want to, with our instruments, we want to be there as a partner for other investors. We can, with the funds with the expertise and with the knowledge that we have about funds, we have 1,200 funds in our portfolio at the EIF. So we have worked with so many managers, first-time managers, experienced managers that are dedicated to specific thematics, which means that we can offer this vetting, if you will, of management teams to investors who want to go in and invest with us, so that we make sure that we invest in the very best teams with the right skills to achieve the objectives that we have for the different thematics in tech. And also that we will be able, as a cornerstone investor, to offer longer investment horizons, which is something that institutional capital needs. Risk diversification, but also access to specific sectors, specific geographies, if that is what your investment strategy is. And then there is a very important point, which is the reporting that comes with investing in Europe, because we have prudential requirements to investors, and that type of reporting when you get into venture capital would, for instance, be how do you evaluate? You have to report on the valuation of the companies that are in the portfolio. And this is something where, indeed, we need support. We need capacity building and technical assistance as well to be able to fulfill these requirements so that it's a smooth process and not this very fragmented one that we hear create problems.
And maybe coming back to you, Kasim, because I also hear you saying we have this tendency to just focus on the European capital market and how it's fragmented or pension funds are not leaning in enough. But there is actually global capital ready to be deployed. Right. So when you look at it from kind of your chair, is there enough syndication partners around? And besides kind of the how do we help companies be more ambitious is what I hear you say and plan for global entry. Is there anything else in either the regulatory area where you think syndication could be made easier to attract, whether that be American capital or Middle Eastern capital or whatever it might be?
Yeah, so I think I would address that in two ways. I think I would address that at one level in terms of our responsibility to our society, communities, countries, and continent, frankly. As a responsible investor. And so what we're working on today is actually putting an alliance together of like-minded long-term investors, whether they be family offices or other foundations, to really think about our responsibility in helping Europe scale and be more competitive. So as we speak today, we are at the, really in the foothills of putting together a consortium in coordination with the EU, with the European Commission, of like-minded long-term capital to do that. So I think that sort of syndication is very exciting, and frankly, I think that money will see a lot of the deal flow that we see that needs syndication, but we're going to keep it among a European family. Then I think if you're a pretty large and sophisticated investor, you can absolutely make sure that you establish the relationships that allow you to pull in capital. So our seed investments team that does seed investing in ventures really has a mission to make sure that the Nordics remain a vibrant biotech hub. And one of the key things they do as part of their business development effort is just continuously knocking on the door of international venture capital to make sure they invest in opportunities in Denmark. And probably 90% of Danish biotechs, private biotechs that have raised substantial amounts, so I'm talking about $30 million plus, were actually seeded by us. Once you start talking about $30 million plus, you're by definition talking about external capital, because you're not going to fund that just in Denmark alone. So look, it's not easy, but I think I'm trying to leave you with a hopeful signal, and goes back to what I said earlier, is we've had the wake-up call. And with that wake-up call, I think the combination of the pension funds, the EU, foundations, family offices, I think if we pull together, we can really move the needle here.
I very much agree, and I'll just return to that when we get a little closer to the end. But want to come back to you, Peter, and maybe just returning a little again to the mindset, because looking at the pension funds, we've seen one of your colleagues try and do a large direct investment in innovative technologies in the green space, which didn't go as planned. And that has a lot of consequences, of course, for the pension holders, but also gets a lot of pushback in the society. So what signals would you need to see either from our own government or from EU in terms of policy in order to lean even more in and to actually be able to write these larger direct tickets?
So encouraging signals would be welcome, but I'm not sure they're very helpful when we have a failure. And certainly the examples you mentioned there has been a drawback for the mindset on this. And the nature of ventures, that some of it gets a huge success, and some of it just fails, and that's how investing in that field has to be. But for pension funds, there can be huge reputation losses when there's a high-profile loss, like we've seen in the green tech recently. And the take we have on this is that we want to we want to try this. We want to be thorough in our due diligence. We try to make sure that we don't have failures in the beginning. We will have some on the way as we add on, but we're very confident with the first investments we made, and also we're very aware that they shouldn't be huge the first tickets. So compared to the AUM we're handling, it's small tickets, but we're learning from that, and it's super interesting also for the investment team to be on these tasks. It's a very popular task. Recently we led alongside with Novo Holdings a Series A round for a small Danish quantum chip producer, and very successful, and we have high expectations for that. So hopefully there'll be some very fine success stories also coming up.
Yeah, so what I hear you say is it's about balancing the risk initially to prove that you actually have the capabilities to do this, and then potentially as you start seeing the returns.
Absolutely,
to
and when we invest larger sums in venture, we have to do it through funds where we divest the risk.
Absolutely. Merete, you had a comment to...
Yes, I think it's very important, the point that Peter is making, because it underlines, and here, you know, the EIB group has also been, of course, invested in projects that did not go well, including, I think, also the one you were alluding to. But it's very, very important that this doesn't mean that you know, we need to stay the course, we need to stand firm on climate, we need to change tack now because of the geopolitical situation on investments into security and defense. And I think that some of the signals that have come out, for instance, from the Danish pension funds recently on exactly that, are very important to keep, you know, the confidence in the investor sphere. And it also just means that we have to partner up more. You know, we need to have public-private partnerships where you know, guarantees, other types of risk sharing, if you will. That means that because you don't want to be alone when an investment goes wrong. You want to be with others that can help you move forward from that investment.
And maybe I'll just stay on that topic of kind of de-risking, because I hear Peter saying, of course, you also have a liability to your pension holders and to the government. And Kasim, you're saying we're actually taking some bets because we also feel that we, one, have the capacity to do so, but also owe it to the community around us. I'm pretty sure some of them will become great in terms of returns.
Absolutely.
But still, it's a bet right now. But if we look at EIF and IEB, what role can you play in terms of de-risking? Because I think it's totally fair that we can't accept or expect commercial venture capital to take risks other than their LPs demand. So how can you play that role, or how do you see others could support that?
No, indeed. I mean, we are of course not there to take all the risk out of projects, because that's not our role as a public investor with the EU taxpayers' money. But we are there to be a partner, as I was saying before. We are there to vet the investments. We are there to provide guarantees. With some of our mandates, we can also take risk, first loss risk, for instance, but for that we need a specific mandate. And we have that, for example, from the Commission with our InvestEU program, so that we can take a higher level of risk. But otherwise, we want to be there at equal footing with the other investors and help, as I said, you know, work with the investment teams that we know have the right skills, and also be there as a guarantee for the diversification of the risk.
Yeah. And maybe just reminding all of you that you can post questions on Slido if there's areas you don't think we're touching upon as much as we could. But maybe picking up on some of this where we ended, and Kasim, your thought about coalitions, because I have this kind of thought that where we really lack is on the big tickets, because we don't have a single part that can go in and put $1 billion on the table as Google, Microsoft, somebody else, one of BlackRock could do in the US, right? So there's more capital partners that have scale and quick decision making. So if we look at kind of a European alternative, it would be natural to think of a coalition where you could blend the different areas of capital we have. You could maybe have some risk offset, but how do we make that efficient? So do you think it's possible to create a coalition or a framework that's as agile and that doesn't take 2 years in bureaucracy in order to make an investment decision, whereas the DeepMind example, Google overnight can decide to put $1 billion on the table?
Yeah. Well, look, we're trying. I mean, that's exactly what we're doing right now. I can't go into too much detail because it's early days still, but we are working with a handful of like-minded, very large European investors in coordination with the European Commission to make sure that those kind of tickets can be written and that scale-up capital is available. So I hope we'll get there. But I also want to say that there's a lot of capital coming into Europe right now, particularly for some. I mean, you've had two giants of private equity, Blackstone, Apollo, come out publicly and talk about the billions in light of what's going on in Europe right now that they want to deploy. So I think we need to also be very, very focused on where the capital is most needed. And that's something I've made very clear as part of this coalition we're trying to build. Let's not double up and let's not compete with other sources of capital. Let's really focus on where sort of the valley of death is. And if that means it's in the scaling phase and perhaps the very, very early risk phase, that's where we need to target our efforts.
So Peter, just returning to you, if a coalition would be built that not only with the like-minded family offices and long-term investors, but could also include pension funds, what would it take for you to join a coalition that would be able to join to fund these large-scale tickets?
No, I mean, basically it should provide attractive investment opportunities. That's what we're looking for all the time, and we can never compromise on that. And I think I could see that happen in a construction like this, but it doesn't have to be a very complicated blended capital constructions. All of it, I think there's a big opportunity for more fully market-based fund solutions now. You see also that some of the big North American actors, like you mentioned, BlackRock, JP Morgan, others would be interested in setting up PE funds with a particular focus on Europe these days. And so more importantly is to have full speed on market integration, have a fully integrated capital market in Europe, and also have a more political focus on the tech sectors that we need to succeed with in Europe.
Let me close with a lightning round. So very short and crisp. If you could change one thing tomorrow to unlock the billions and create our own tech unicorns, what will it be? One thing.
Well, tomorrow is probably going to
Next
be
Monday.
Too ambitious, but I would really like to see a larger share of, for instance, the pension funds, asset under management to go towards.
Good. So you're asking Peter to add the money. Kasim, one thing.
Two things. Capital markets harmony for a more robust exit environment. Number two, support to help companies scale where there's existing friction given the various jurisdictions that we
bring down barriers in the inner market of EU. Peter?
Yeah, to have the pension system we have in North Europe, to have that also in the rest of the Europe, because that would provide so much more capital for investments in Europe.
thank you so much. Thank you for joining us. It sounds like we might have solutions coming. Thank you.